welcome to Looking at the Markets with David Modell. I just wanted to give you a tip about swing trading using the CCI indicator, which is the Commodity Channel Index. I'm showing it here on tradingview.com, and I'm using the daily candlestick chart where each candle represents 1 day of price action, and I'm using Solo stock, SOLO, which is an electric vehicle company, Electric Mechanica Vehicles Corp., just as an example. All right, and so I've got the CCI on the 20 period here, which is the standard setting on tradingview.com, and the daily candlestick chart, which is pretty good for swing trading. What a lot of people do is they'll wait until the CCI indicator goes below negative 100, which is this line here, negative 100. Okay, when it goes below that, it's oftentimes considered to be oversold. But you probably want to be cautious, and so you might not want to buy until not only does the CCI line go below 100 or negative 100, but also you want to wait probably until it goes back above negative 100. Okay, so it goes below it and then pops back above it. That way you're not catching a falling knife, right? You're not catching something while it's going down fast. You're waiting until it's low, but then it's starting to go back up, perhaps. All right. But even that might not be good enough. All right. If you want to be a little bit more cautious, I'm going to tell you something that you can filter. You can use to filter even more than that. All right. So your first filter might be, okay, well, don't buy until it's not only below negative 100 on the CCI indicator, but also pops back above it. That could be one filter, right? But even that might not be good enough, because look at what could happen. Okay, look at Solo stock. Yeah, here it was low and then starting to curl back up, right, around here, right about when the CCI indicator went below 100, but then back, or below negative 100, but then went back above it. And you might say, oh, I want to buy here. But look what happened afterwards. Okay, it went into a horrendous bear market here from around 230, or even higher actually if you include the wick on the daily candlestick chart. It actually went to 250 or more, but then went into a terrible crash here. All right, went to actually below $1 from $2.50 a share to below $1. Pretty terrible, right? So you want to avoid things like that. So you want another filter, because check it out. You know, the CCI indicator went below negative 100 and then back above it, and you would have bought here at a pretty bad time. All right, because yeah, it popped quickly but then crashed. So what else can you add as another filter to make sure that you're not buying in a bear market? So let's look at a different time frame. Yeah, you want to look at the daily candlestick chart. That's cool. But let's also look at the weekly candlestick chart, all right, for Solo. And if the weekly candlestick chart shows that you're in a bear market, for example, if the weekly is below negative 100, you're quite possibly in a bear market. And the trend is not your friend at that point. The trend is going against you. All right, so you can filter all that by also just double checking the weekly candles, weekly candles, the weekly chart, where each candlestick represents 1 week, and make sure that the CCI indicator is not below negative 100. If you want to be really careful and really cautious, make sure it's not even below 0, below the midline here, which is 0. All right, definitely. You might want to, if you want to be cautious, you definitely might want to filter out below negative 100. And if you want to be super cautious, if you want to be more conservative, then don't even touch it if it's below 0, below the midline, okay? Because, you know, if it's below the midline here, like it is here, right? All this time here, check it out, right? All of this price action is below 0, and it's just a terrible bear market here, all right? So that's something you want to avoid. So that is another filter you can use. We're using dual or two different time frames here. And yes, you might miss some opportunities if you do that, but at least you can avoid really serious drawdowns. So that is something to consider, using two different time frames. It doesn't take but a couple of minutes to check the weekly candlestick chart. And then you can go back to the daily if you want to, and then do what you're going to do. All right. So I highly recommend that. And that's not just for the CCI, that's for other indicators as well. It's not a terrible idea if you're using stochastics or RSI, for example, which are pretty similar to the CCI in the way that they work. If you check that other time frame, just take a few minutes to do that, and you could avoid some serious crashes here, some serious drawdowns in your account. Because you want to go probably with an overall uptrend, not a long-term downtrend. All right, something to think about. All right, so I hope this was helpful to you, and I hope it saves you some heartache later on. It might have saved you some heartache earlier in your trading career, your investing career, but we can't change what happened in the past. We can change how we behave and how we trade and invest in the future. All right, so hope this was helpful to you. Thanks a lot. I appreciate it. More videos coming soon.